You're listening to the Reinvest Podcast, where each Tuesday we show business owners and entrepreneurs how to diversify into real estate by equipping you with the tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Hey guys, welcome to another episode on the Reinvest Podcast.
I feel like that was the intro where I should have done like the air horn, like.
I don't know if kids are doing that as much these days, but no, we're excited to have you here. Man, I just feel like we've had some awesome guests, like just a really good run of interviews with people, which is always super rewarding for you and I, because if it's anything we've learned over 3 years, it's that you can always learn something new.
Yes,
in real estate investing.
It blows my mind.
Oh, it's an ever-endless journey. And I think, if you're listening to this show, first of all, the fact you're listening to a podcast probably is an illustration that you want to be a lifelong student. And the older I get, the more I'm convinced that that is the path to success. So continue on that. But today with us, we have Jens Nielsen. And Jens, you are in Santa Fe, New Mexico, a little different than Ohio. But give us a little background to who you are and how did you get into this wild thing called real estate investing?
Yeah, obviously I didn't grow up in Santa Fe, New Mexico. I just ended up here after moving around the country. I came to the United States 30 years ago. So obviously I'm probably a couple years older than you guys, but came to the East Coast in my early 20s, had an opportunity to, do the traditional educational path, right? Undergrad, graduate school, University of Maryland. And
what were your degrees in?
Computer science.
Okay. Yeah. In the that was a pretty rapid time to be in that field.
Oh yeah. Telecommunication was exploding. I kind of started in telecommunication that shifted into more computer science and so on. But yeah, it was exploding, right? Millions and billions of dollars are being invested in expanding networks and everything. So it was a great time to be in there. What I missed, I was not an entrepreneur. I was an employee, right? So I worked for small startups, big, what's now Verizon. I worked for them. I worked for, local government. I worked for Native American tribes. I worked for other people or other companies throughout my career. It was good. It was comfortable, good income. Me and my wife, I think they call it dual income, no kids, right? So we had a comfortable lifestyle. We moved around, started out on the East Coast in Maryland. After about 10 years, we realized that, man, the traffic and the weather and everything is kind of horrendous. So we moved west, and west was Albuquerque, New Mexico, because my wife had some family here. She's American, obviously. Started out, moved here 20 years ago, moved around to Colorado, lived in a small ski town in Colorado, and then during the pandemic moved back to New Mexico to Santa Fe. So we've been here 6 years. So that's a little bit about the moving around.
Yeah, you've lived a lot of places.
Yeah, wow. And you're originally from Denmark.
That's right.
Okay, so where is that in relation to like Alps and mountains? Did you kind of grow up doing that kind of stuff?
No, Denmark is just this little island community, or there's a peninsula attached to Germany and some islands. It is wet and cold and rainy in the winter. It seemed like we had snow when I was a kid, right? But now it seems to be wet and rainy. And then in summertime, the sun shines from 4 a.m. to 11 p.m. and it's nice and sunny and stuff like that. Oh,
wow.
But no mountains, very flat, a lot of ocean. So we did not go skiing. It wasn't until I, as a young adult, was able to travel down to France, which is, a long way south, travel down there to go skiing. And I fell in love with the mountains and absolutely love being anywhere close to big mountains these days,
Yeah, well, Colorado would definitely check that box. And even in New Mexico, there's some pretty good stuff there. Okay, at that time, you're going through, you're an employee, you and your wife are working, and you're more in the corporate side of things, it sounds like. And when did real estate investing even come on your radar? Because what I've realized by doing, 160 plus episodes of this, everybody's touch point and on-ramp is a little bit different, and nobody's really looking for it. You know what I mean? Like there was a conversation, or there was a buddy, or, you saw something, a Carlton Sheets infomercial at like 2 a.m. about cash flow. Like, what was that for you?
Yeah, no, thank you for sharing that. So there had been a period of years where I'm like, man, I want to do something else, right? I need to do something that separates or disconnects my time from my income.
Mm.
I couldn't really figure out what that was. Everybody, well, they were just consultants. They were, just working in other ways, and I couldn't really. None of that really made any sense to me because I would take all the risk without having any upside. And we were talking before we started recording about Brandon Turner, and I picked up Brandon Turner's book, How to Invest in Rental Real Estate, I think it's called. And we're talking 11, 12 years ago. I mean, he'd
Right.
probably just written it. I put it on Audible on my phone, and I went for a walk with my dogs. And when I came home, like my head was exploding because, like, oh my God, this is what we need to do here, right?
You're like, this is it.
Dude, I'll never forget, like when I started listening to Bigger Pockets for the first time, it like literally something awakened inside of me. And I don't know what it is. I've talked to a lot of people who have had a similar experience of just consumption of information specifically for real estate investing. And maybe it was so underdeveloped in me that it felt like I was learning something completely new. But I'm with you. I binged hours and hours of that stuff.
Oh yeah. And then it was, every single podcast. And, 10, 11, 12 years ago, there weren't that many podcasts out there, right? There were some of the guys that are still around, but Bigger Pockets, but then plus, Michael Blanc and Rod Cleef and some of those guys, right? Just started listening to all of those, right?
When did you start listening to the Reinvest podcast?
Yeah.
On episode 1 when it came out.
Yeah, no, there were a lot of podcasts now, and there was definitely a few of those guys. What I appreciate is guys like Rod Cleef. He went through the great financial crisis, and I think that was one of his big claim to fame was he was willing to share his journey on the other side of that. Instead of, popping up and be like, hey, you should invest in real estate. And I just started 6 months ago. Like that guy he went through some tough stuff. But so you started, I love that question. How do I disconnect my time from my income? And that's really what sent you searching for an alternative investment, form of investment.
Exactly. Right. So, 2016, so 10 years ago, right? I turned 45, meaning I'll be 55 this year. So I was 45. I was like, oh my God, another 20 years of working for whatever. That did not appeal to me because, IT had really served me well, but also it's a bit of a young man's game, right? Because it changes so quickly. So I just couldn't really see the path there. It didn't make sense to me. And my wife was also tired of living in the mountains. So we had to move just to kind of get out of that. And I was like, oh man, do I go and get another job again? I don't want to do that. So I realized that I wanted to build a stream of income so that I could retire. And the funny thing is, looking back, and I've told this story, looking back, the plan was one fourplex a year for 10 years, having 40 units. That would give me 10K of income, roughly. Incredibly linear math, right?
Right. But you got to start somewhere. Yeah.
That's right. So this year was the year I was supposed to retire at 55. Well, things obviously did not go that linear, right? So we started buying in 2016 in Albuquerque, New Mexico, because that was the closest bigger city where it made sense. Denver was like 7 hours away because of the mountains. Albuquerque was 3.5, right? So we started investing in smaller deals, learning through Bigger Pockets how to underwrite, getting connected with some brokers, and then just bought a couple of fourplexes and 11 units. We bought like 19 units in the first year. That was all the cash we had.
Wow.
So all the money was tied up in real estate very quickly.
So you all of a sudden you went from 0 to 19. What happened? I mean, did you have a good experience, or did you find out very quickly that property management's hard, or what was that like for you guys in the first year scaling up to so many units when not having any rentals?
Well, but first of all, before you answer that question, going from 0 to 19 units and having all of your cash tied up is super relatable for anybody who started investing in real estate, because normally you're like save, nest egg, emergency fund, have all these things. And then your world gets flipped upside down and you're like lines of credit,
leverage,
gotta invest, equity, got to get the loan done. And I'm sure that was probably a different mindset for you guys.
Oh, totally right. Because it had been, of course, 401ks and IRAs that was sitting out there, didn't touch that. But having just luckily invested in the stock market over many, many years, right? We had grown, I think there was a couple $100,000, which is not nothing, right? And real estate was really cheap in Albuquerque back then, right? The first deal was $117,000 for 4 units, right? So
Yeah, wow.
Oh, to go back to those days. Yeah.
exactly, right. But it was scary. I mean, because, you know, if it goes
Rents
wrong,
were also lower then too. You know what I'm saying? So it's like we all were like, oh, that's so cheap. But rents were also, 40%
right?
of what it is now. Yeah.
Yeah.
But so a couple of things really came in that first year. A couple of things which I look back on, it was kind of a bit of a blessing because I invested out of state, meaning I could not self-manage. Thank God, because the few times I've tried self-managing, I absolutely hate it. So I became an investor instead of an owner operator.
Okay.
And I see a lot of smaller investors, they buy, a house down the street or a fourplex and they try to self-manage. They can never really scale because they just, oh my God, the toilet is leaking. Well, I'm going to go and spend my Saturday replacing the toilet, whatever. And they're just working in the business. They can't scale and they're so cheap.
The proximity of those is like, I can do it, therefore I should do it. You get sucked into that mindset.
Oh, totally. Yeah. So luckily I got a good referral to a property manager slash broker back then. He's been the same broker. Guy's 81 or 82 now. He's a partner now in some deals, but essentially I found somebody that liked to work with new investors. He could be my property manager. He could renovate the units. I trusted him. He was very affordable and so on. So him and I have kind of collaborated there for, over 10 years now in that market, and that was really, that was a great introduction to it, right?
So where's your portfolio now in Albuquerque? Do you still own that stuff or did you sell it off and jump into something else?
The first two fourplexes have been sold. The 11 unit that we bought, we still have that. We then did a joint venture with my broker. We bought 38 units in 2018. Get this, we paid 1.2 million for it, put another 600K into it.
Oh my word.
You can imagine, been refinanced, I think only once. You can imagine how that thing is cash flowing now.
Yeah.
Wow. That's so crazy. Yeah.
Plus, so that's 60 plus. We then later on bought another 16 units. Me and my wife. So we have like 65 units. Some we own ourselves, some we have some partners in.
Yeah.
Plus, we've then moved into light industrial, and we can definitely talk about that. That's been more the last few years. We bought some warehouse space, some flex space, and so on. Right.
I think one thing that you mentioned is you're a certified high performance coach, and you were telling us off camera how you kind of started into that, and it really just was an acquaintance or a friend said, "Hey, I see what you're doing, and I'd like to try and do this too." So you kind of brought them under your wing, and then it seems like it thrust you into these scenarios where you've been able to coach people in real estate and in business. Is that right?
That's right. As I was going through, I've always loved to teach, right? That's just kind of a passion of mine. I never was a teacher because I would not have paid any money. But, when there was an opportunity to educate and stuff, I love doing that. So I found opportunities, informally at work and stuff. But then when the opportunity presented itself to actually mentor somebody in the real estate space, I jumped on it because, hey, I've done this for a few years, people want to learn. And they may not want to sign up for, the expensive gurus who are out there. I was more down to earth. I'll work with you directly. And I helped them grow. We talked about Eric, who started investing. We actually partnered on a couple of deals too that we've since sold. He was able to build a business where he could move overseas. Got a couple of young kids. They're living in Barcelona for a few years, right? So we're able to help people do those things. But it went from just teaching somebody how to buy a small apartment or a big apartment, whatever, to actually start helping change people's mindsets. Because one thing is you do the technical work. If you don't have the right mindset, you're not going to leave your job. You're not going to maybe take the risks that are necessary. You may not have the right conversations with your spouse, all these things. So I really got into what we call high performance coaching, the mindset piece, because I want to make sure that people were ready to make the necessary shifts to pursue their dreams and so on.
There's probably a lot of people listening to this podcast who are in the midst of starting their portfolios or trying to grow their portfolios or grow whatever, business or venture they're thinking about doing. And just to kind of like maybe nestle into this topic of like, now that you've been doing this for a while, you've been an entrepreneur, you've been a business owner, running sophisticated real estate company and a coaching company. So like, what are those roadblocks that you've constantly seen either yourself fall into or helping coach others out of that is stopping people from really achieving their entrepreneurial goals?
Yeah, and I call this the owner evolution framework, right? Because, and I have suffered through this myself, when we start out, we want to control everything. We want to be in every single decision. And a little bit like that, hey, if the house is down the street, I may as well go and fix the toilet myself. Same thing, if you're an entrepreneur, you want to be involved in every single decision because you don't trust, quote unquote, your team to make decisions. You don't level up your team. It's a little bit like a king with a bunch of helpers. And that works for a while until it doesn't, right? So we work on removing the owner from that being in every single decision, right? Being in the critical path, because you can't do that for very long. So that's really what the focus is. Because now I like to work with those slightly established businesses who is like struggling to grow to that next level, right? And that's most of the time the owner can't get out of his own or her own way. They don't have good systems, processes, accountability, goals, meetings, like those typical things that, having been in IT for all these years, it sounds, hey, that's pretty straightforward, but most people never really think that way, right?
Yeah, because what you're talking about is the solution to their problem is for them to change, and it's painful. We have a hard time seeing ourselves accurately. And then second of all, it's just hard to set aside those habits or maybe some of those fears or insecurities.
Yeah, and I think part of that's like the who, not how. You know what I mean? We talk about that principle a lot of like, who's the right person to be doing property management, and not how do I learn how to do property management so I can go change a toilet. No, wrong. So what are some of the other like evolutions that people have to go through in order to kind of step into this role of entrepreneurial or owner or business owner?
Yeah, we got to, we got to slow down and step back a little bit, because a lot of people, and I did the same thing, right? I wanted to invest in real estate because I had this goal of retirement in 10 years. Did I do it because of a love of real estate? Not really. It seemed like a vehicle. We need to step back and really get clear on that vision for what it is. How do we want to live every single day? What are the people we want to surround us with? What are the experiences we want? So that we get clear on that. And then we start creating the vehicle to get us to those dreams, to that vision. Most people they buy the car and then they decide on the destination, right?
Right.
Mm-hmm. A little bit like me. I started buying real estate and then I try to figure out the destination. If we can step it back, maybe it's real estate, maybe it's something completely different, because we can make money in a million different ways. Make sure we do something that we are passionate about that can sustain us in the long run, right? So that's slowing down to speed up is kind of how I like to look at that.
I think that's counterintuitive for most of us, because if you are entrepreneurial, it's kind of like what you make the assumption what got me here is going to be what gets me there. And what got you here is a bunch of energy and just like trying a lot of new stuff. And if there was a wall, you busted through it instead of sitting, at some point that wall is going to be too big. You can't just grunt your way through it. You're going to have to kind of step to your point and really break down the components and the elements of a business and in real estate investing. I think observationally for us, it's been an iteration. Like, Seth and I, it was get some disposable income. And then it was, you look for a deal and you buy one and you don't love it, but you did it. And then at some point you're like, well, if I keep doing this, I'm going to have like Frankenstein's monster in terms of a portfolio of real estate. So then you kind of narrow that down a little bit. I think what's been tough, and I don't know if you have any advice for this, is right now, personally, myself, and I don't want to speak for Seth, but I just feel a little frustrated by the speed. I feel like at the mercy of the market, okay? And now what's being required is that patient consistency And that is tough to sit in that, because all of a sudden you feel a sense of like, well, maybe I'm not as focused, or maybe I'm not like actually hitting my goals to the same degree because I was used to seeing these metrics or this pace of growth. And like, when do you just resign yourself to the market's going to do what the market's going to do, and then actually diagnosing maybe there are some habits or things that I need to take a look at?
Yeah, in that case, right. So we shifted direction a little bit to went into, if you guys are focusing on apartments, but we shifted into light industrial because we saw an opportunity there, right? So is there a new niche that makes sense, a new product, type that makes sense to invest in? Or do you say, well, we can't really buy anything now. We need to optimize the hell of whatever we own right now, become really, really good at that. And as entrepreneurs, are there some new opportunities out there that you can explore that ties into real estate, right? It can't, because we can't force deals to work if the numbers doesn't make sense, right? If the seller's not willing to meet the buyer's demands,
Right.
we don't have a deal,
Right.
So do we sit on our hands, or do we try new things, right? And that's where, we went towards the industrial space. That's why I continue to grow the coaching and stuff, because I think it's super interesting to do that. And, I can work with all these different individuals at the same time, right?
What I appreciate about your answer, it feels like an honest answer in that sometimes people can portray themselves as like, this is what I do, this is what I'll always do. But I think realistically, we're in business, you're always trying to keep a pulse on where you're at, where the market's at, what's going on around you. And knowing when to pivot has got to be one of the hardest things in business, because you're like, I want to continue in a direction to see that compound effect, and I don't want to quit too quickly. So I think where I've backed into is, how do you make pivots that are strategic, not completely 180, like, you know what, this isn't going well, I'm going to go into a completely different industry and try and make money over there. And I walk away from real estate investing, although that's a big pivot. But can I pivot that allows me to still move in the direction that I committed to and that my goals align with, and actually move with the flow of the market? It sounds like doing light industrial was that for you. I'm curious to know, were you able to find more deals by switching into a different asset class? Did that achieve what you hoped it was going to achieve?
Yeah. I mean, it's been a couple of years since we didn't bought our last multifamily deal, right? Because of some of those challenges that you talked about and so on. So, and it was interesting, right? And a buddy of mine came to me a few years ago. He said, "Hey, I'm not really an apartment guy, but I do like industrial. I've been doing it for a while. Are you interested in partnering?" Because he hadn't been syndicating. It's like, yeah, let's take a look, right? And I trusted him, so we did our first deal a couple years ago in that space, and it completely opened my eyes up for a new asset class, right? Triple, all these things, triple net, and all these, 5-year leases and automatic escalators, all these things I didn't know anything about. It's like, oh yeah, this actually makes sense. Here's another tool in our toolbox, because how do we make money in real estate? Well, we buy real estate. It doesn't have to be apartments. It could be, other things, right? So as the market shifted, but we saw a high demand for Class C kind of warehouse space, we were able to do it, and it's been slow, but it's been working for us, right?
Yeah. That's I think it's telling to be able to zoom out and say, what's the goal? The goal is real estate investing. It's not this specific thing that I'm married to.
Right.
Yeah, appreciate that.
Awesome. We're going to jump into our smaller pockets. So this is the part of the show where you get to tell us about a deal that went wrong. And so what went wrong, and then what was kind of like the end result, and then most importantly, what did you learn from it, so that way you can learn from your mistakes?
Yeah. So I mean, you guys are in Western Ohio. We have some deals in further east in the Cleveland area.
Okay.
And bought some stuff there, and it seemed like, because I have some partners that are up in that market, and 2021, I think it was 2021, we bought 75 units, 2 buildings kind of next to each other, with short-term 3-year debt, with a very aggressive renovation/rental increase plan. And from day one, we struggled, right? Because yeah, we
Oh
got the
man.
units renovated. We couldn't meet the rent projections, and then inflation hit, everything got more expensive. Taxes in Ohio are just absolutely insane, as you know. But taxes got, kept hitting us, insurance. So we were able to float the deal, barely make it like cover our debt and our expenses. But then 3 years was up, the loans matured. Yeah, we can extend it, but now interest rate went from seven something to like 10. Well, that
Oh
killed
my
any of the remaining
gosh.
cash flow.
Wow.
And, you know, poor NOI kind of, we had decent occupancy, right? But we go to market and the market is telling us this is worth what we paid for it, plus
Oh
a little
man.
bit, right? It's worth what our debt is on the deal. It's like, holy smokes, right?
Wow. Wow.
A very painful situation. But basically what ended up happening, right? We sold it. We covered our debt, but we lost our investors' equity, right? I think I had to write a personal check at closing so that because of some other expenses, which my pocket got a little bit smaller and our
Yeah,
investors'
smaller.
pocket also got a little bit smaller. That was a
So
very painful experience, right?
so
Wow.
how'd that shake out? And like, thank you for sharing that.
Yeah, thank you.
Those are tough stories. You know what I mean? Those are tougher than, hey, I did a flip and I have egg on my face and I broke even on my flip, right? This is a, pretty serious, and some people let that stop them from moving forward at all. They're like, oh man, I failed everybody. I, lost these people's money, and now they're like out of the business or so discouraged about it that they've quit. How did you move forward from that? From like an investor relations perspective, did your investors in that deal lose confidence in you? Were you able to retain any relationships? And kind of, did they stick with you on other deals?
Yeah, I think it's a little bit of that. If you look at investing, anything, there's a tail, right? There's a tail in both end, and then there's like the middle where, that average, the bell curve. If you're on the tail, the losing tail or the winning tail, right? I've had deals that have made 350% return in a couple of years, and then the ones on the bad end that lost money.
Yeah.
If you and luckily most of my investors were in multiple deals that have done fine. Yeah, this one didn't work out, but other
Yeah.
deals have done fine for them, right? So at that point, sophisticated investors realize that not every deal is going to work out, right? And I've maintained a relationship with them, right? So that's, and we're selling a deal here in the next month or two that's going to do really well as well, right? So I maintained that relationship there. What would have sucked is if, Joe investor he done one deal and it's the one bad deal, right? That guy is going
Right.
to say, well, I'm never going to touch real estate again,
He'll
right?
walk away with the narrative that real estate is not a good way to go about building wealth. And that's not
That's right.
necessarily the right messaging.
Or that somehow you intentionally scam them and, or whatever it was. You know what I mean? And there's all those questions that float around
Yeah.
people's minds when things don't go quite right of like the why. Everyone wants
Yeah.
like a perfect answer that's going to satisfy them.
Well,
But what
So
did you,
there were some sleepless nights there, I'll tell you that much. And it's still, it's a bad situation to be
so
in.
what did you kind of learn? What was the takeaway for you personally moving forward,
yeah.
looking at other deals?
All right, low leverage, long-term debt. Don't buy in certain markets, right? So I'm not being facetious, but definitely
Yeah.
low leverage, long-term debt, right? Don't do these bridge loans where God knows that everything has to go perfect for you to get out of it again, right?
Yeah.
Especially in a
So,
rising interest environment, that was the other side of it.
yeah. And
There was
but
a
it,
cascade of
but it
things
kind of
happening.
showed some of the instability and some of the bad practices that people were in when we got into that high rate interest rate environment, like a lot of people were doing. I mean, not just you. I mean, it was everybody. Everybody was doing these bridge loans, and a lot of people all over the country have had deals fall apart. Companies have gone under. Properties have been lost. So, what kind of leverage are you kind of looking at in deals moving forward? Like, where are you guys at now? Where do you guys like to be?
Yeah, I mean, right now, again, it's been a few minutes since we bought our last apartment deal, but right now, right, 70%, maybe
Yeah.
75%, and not not this so what happened like in 2019 and 2020, everybody just like rinse and repeat, buy, fix it up a little bit, raise rent on like 10% of the units and sell it to the next guy down, the next person, right? That worked for a couple of years until it didn't work, right? So it didn't matter if you had short-term expensive debt. If you can just flip it to the next person, well, that stopped in 22
right.
and 23, right? So you're stuck with, musical chairs. You're stuck with it. Now it's don't rely on these crazy like projections of rent's going to grow X number of percent. Don't make these rosy projections and so on, right? And I looked at a deal. Somebody brought a deal to me the other day that I could have KP'd on and partnered on. I was like, I don't know. A lot of things have to go right for this to work out, right? So I'm not interested, right? So,
yeah. Those are good lessons to learn, though.
Yeah, well, I mean, like, just admittedly, it's been in a bull market run for a long time up until the last few years. And so even if you were investing in 2011, 2012, if you've been an investor for over a decade, and in that time, you've really only seen an upward projection on the market.
Well, there was an investor even that we had on the podcast and who was a pretty, big name in the multifamily space and, would speak at best ever conferences and, do all these things. And their entire they lost their entire $100 million portfolio. And and on the outside looking in, and even probably I'm sure to their investors, I mean, it just seemed like such a bulletproof company who is time tested. And, but man, when people start buying bad deals and there's some breakdown or dysfunction in your company, you cannot overcome all those things if they're just bad deals.
Yeah, I think it's just good to know what's possible and what can happen.
Yeah.
And we had a friend of ours, mutual connection, that was in good standing with the bank, and the bank called the note.
Yeah.
And that's just, you've been making your payments and there was no issue and they called your note. And it kind of like rattled something inside of me of like, this isn't like Great Depression era type stuff where there's a run on the bank. It's just a bank that's like, yeah, we're just a little too overexposed and for whatever reason, we just don't want to continue this anymore and we're going to call your note. Well, that's terrifying for anybody. So it's good to know what's possible so that, and I think the one thing too is just what I hear you saying is discipline and really being able to kind of hone in on what those core drivers are that you need to not deviate from. We talked to a guy on the podcast, actually just before this episode, and he had bought a house and was very comfortable and familiar, bought a house and he didn't realize that it had been like fire damaged.
Oh.
And it was just one of those things where it was like you're moving fast, you get a little too comfortable, blah, blah, blah. And he was like, man, he walked away with some good lessons on that. But Jens, we're going to go into what we call our little nugget. So Jens, this is the part of our show, and you've given us a lot of really great feedback. What is something fundamental to the way that you operate yourself that you think has contributed to the success that you've had?
Transparency, right? Always be transparent about what's going on, the good and the bad, right? So, not because I've seen other investor or other, syndicators out there, and they're just painting a rosy picture of something that isn't really rosy. Well, bad news doesn't approve with AIDS. An old boss of mine told me.
Yeah. No, that's good, and that's difficult to do. But you know what? I think that when people walk, and you walk through somebody and you see that level of transparency, in a weird way, it instills more faith. Because we all know that things are happening or do happen, and I think we all crave that kind of honesty in the relationships, be it business, in an employment scenario. And at least for me, my respect level for people has increased exponentially when I've seen them, come forward and just be like, hey, we're figuring it out.
And you know what I respect more, even just with the transparency, like bouncing even back to the previous story, what I respect more is someone that does their best to not lose investor capital. You had to pay off the note. At least you didn't lose the property. You lost investor capital, though. It happened. But you didn't, go and start a debt fund for distressed real estate and then, package it as I'm raising money and buying distressed assets and you should invest with me. And you buy your own deal. That was happening. And you weren't disclosing to investors that you were buying your own bad deals. And, I would rather see companies do that and be like, yep, I got egg on my face, made a mistake, learn from it, look at my great track record still, because I've done all this other stuff, and you move on instead of try to package it with some more junk.
Yeah.
It's not a bad idea to create a distressed deal fund right now. There's opportunities out there.
Yeah, I'm sure there are. Okay, and as we kind of close and bring things to a landing here, what's been one of the most beneficial resources, in your opinion, that's really contributed to your business development?
So I think what really took my growth from this little bit of, small mindset, living in a small town in Colorado, to actually the opportunities of syndication and everything was joining one of these gurus back in the day, right? Joining one of these educational programs. Luckily, when they were less than 10 grand to join and stuff like that.
Right.
But just going and getting exposed to new ideas, to new people and so on, right? So a lot of things I've done would not have happened had I not been exposed to that. So I think my key thing is get out there and get exposure to it. I mean, you mentioned the best ever conference. I went to the first one in Denver 10 years ago, right?
Okay,
Wow.
I did invest with Joe Fairless, some of his earlier deals that went fantastic, right, and so on. So just get out there and get new ideas. That's the biggest thing, right? And too often we're just like in our own little world and we get stuck in that thinking.
Man, I'm telling you.
I love that. I mean, we've experienced that with even the podcast.
Yeah.
It's like you don't even know what's out there. You don't even know what people are doing.
Right.
And you think so small and you think so hyper local, I think, to what your friends are doing or what your boss is doing or,
what you've seen.
And
firsthand.
you just don't, it's crazy how when you put yourself out there, go to those conferences, get the coaching, whatever that is, it really kind of expands your thinking. And I think going back to even your performance coach training, like it's a mindset to really like build the business. Like there's the dollars and cents of it. But if you're not willing to push through the hard times and you understand how to process that information, you're just going to quit. Every time you run up against an issue, you will quit. And I love that.
Jens, what does it look like for people to connect with you outside of this call and to follow your success?
Yeah, just go to my website. It's jensnielsen.us, jensnielsen.us. You can put that in the show notes. And my phone number, that's actually my cell phone number on there. You can text me right then and there, or there's a link to schedule a call, right? I've had hundreds of free calls. If you need advice on a deal you're doing, if you're stuck in your business, if you need, different strategies and stuff, schedule a call with me. I had one early this week. This guy is at 200 some units, and he's like, man, how do I get to the next level? He's just like, he couldn't. It's like, let's have a deeper conversation about that and see if we can get you unstuck there, right? So that's the kind of work I love to do.
No, it's awesome.
We will put those things in the show notes. Man, thank you so much for coming on today and to share with our listeners just about real estate investing and how you started. I love just the progression and asking that question, how do I separate my time from my income? I think anybody listening to this needs to put a lot of thought into that question.
Yeah, about leverage and scale. So thanks, Seth and Garrett. I appreciate it.
As always, excited that you joined us for another episode of the Reinvest Podcast. If you want to learn how you can use your hard-earned capital to diversify into real estate, go to our website, reinvestcapital.us, and shoot us a message. Move farther, reach higher, and grow deeper.